Good morning, good afternoon, and good evening. My name is Diana, and I am the Global Blockchain Business Council's Head of Research and Sustainability. And it's a pleasure to welcome you all to the GBBC's Virtual Members Forum on CBDC Success Goes Beyond Technology. It's a bi-weekly webinar series showcasing the innovative work of our members around the world. And today we're joined by Imran Khan, the EVP of Partnerships at Bitt. Bitt is a GBBC member and a world-leading central bank digital currency and stablecoin platform provider that enables banks to efficiently deploy a CBDC of their own while empowering financial institutions to integrate with internet payment rails, manage their treasury operations, and provide powerful payment services to retail and enterprise clients. So briefly, before we begin, I would also like to introduce Imran. Imran Khan is the Executive Vice President of Partnerships at Bitt, and he has recently led strategic engagement with the Central Bank of Nigeria to successfully launch the eNaira, the CBDC for the largest economy in Africa in record time. Imran possesses over 15 years of technology experience, spanning all aspects of information technology, which allows him to bring technology aspirations from idea to reality. So we welcome your questions at any point during today's presentation. Please feel free to submit them in the Q&A tab at the bottom of your Zoom screen, and we'll take them after the presentation. So thank you, Imran, for joining us. And I will now hand things over for you to begin.
Thank you very much, Diana. So happy to be here and talking about this important topic about the deployment of technology platforms and understanding that it goes beyond technology to make it a success. So a bit about my background. So I'm head of partnerships at Bitt, collaborating with central banks and commercial banks for the deployment of digital currencies, such as central bank digital currencies and stable coins. As head of partnerships, I bring in different marketplace collaborators together, and we come and serve our clients with complementary services and solutions. Sometimes side by side, sometimes we embed those services and solutions within our offering. So we understand that these deployments and these initiatives around the digitization of national currencies is a very complex topic. And we don't think that one provider on their own could do it. So really joining forces is really the best way to succeed. That's what I do as head of partnerships. Prior to joining Bitt, a little over a year ago, I spent 10 years in tech consulting at Deloitte, where I helped IT leaders at various companies help manage their IT function. I helped run IT operations for some of their technology platforms. I also spent 3 years in the blockchain advisory team at Deloitte. And in those 3 years is where I really discovered digital assets, its value, including central bank digital currency. With the topic gaining traction, I ended up leading the global CBDC committee there at Deloitte. So what's Bitt? Before we get started on the topic. We are a US-based fintech that's founded in 2014, and we're exclusively focused on the digitization of national currencies. That means stablecoins and central bank digital currencies. And we're known mainly for some of our live deployments. We're live in 3 continents and about a dozen countries so far. We're known for launching 2 central bank digital currencies, one in the Eastern Caribbean Currency Union, which consists of 8 nations, and also, as Diana mentioned, the Central Bank of Nigeria, their eNaira project. So we're a software company that provides the applications that are required by all major stakeholders of a CBDC. So a monetary authority needs applications, the intermediaries that help with that distribution, often those are banks, but they could be other institutions, businesses, consumers, etc. So we're blockchain agnostic, so we don't have our own blockchain to bring to the table. Our solution just basically leverages the best-in-class blockchains out there, whether that's Stellar, Hyperledger Fabric, Corda, or other DLTs. Whatever really the DLTs that have been experimented with by central banks for the purpose of central bank digital currencies. I propose we get into the topic. So the problem we're trying to solve. So we know that the world is digitizing, and physical cash and checks aren't adapted to e-commerce and transacting remotely to neighboring cities or states. There's a high reliance on the private sector to provide that electronic form of money that enables those use cases. That means the paper money that we have in our wallet can't be used in those cases, but we do have actors. So that's great. There are marketplace participants doing that. However, we also know that there's about 2 billion people globally that are underserved by the current banking system. Now, why is that? There are alternatives, but some of those alternatives suffer from challenges of interoperability or the safety of funds. There's also the cost of those services. And the cost of those services could be a big reason for why they're underserved. Transaction fees, costs of remittances, there's even minimum balances to open an account. After all, many of these actors, and most of them, are for-profit institutions. So central banks around the world are examining the question of whether they need or should provide a digital form of the money as we know it today. So central banks have been studying the impacts of digital forms of money for decades. We haven't heard much about it because they've always done research around what is the future of money, what is the impact of these new instruments in the market. But the past few years, that study has been accelerating. We've seen it in the news. We're seeing it with projects going live. Why are they looking at it? Well, we've spoken about some of the challenges, right? There's a decline of cash in many countries. There's a need for faster, cheaper, and more accessible payments. And there's new forms of money coming in, right? Such as stablecoins. In 2019, central banks around the world mobilized together and reacted to Libra, which was then called Diem, a global stablecoin project involving major actors around the world to come out with a new form of money. So central banks start scratching their heads and saying, what are we doing? Maybe we should do it a little faster, all of this research, and figuring out what we should do. And what are the parameters in which these new institutions could operate? So 90% of central banks around the world are studying CBDCs. And it's not just theory, because more than half of them are actually experimenting with proof of concepts and pilots. So there's many reasons for them to do that. I've listed a few already. But in addition to the need for improved payments and financial inclusion, there's monetary sovereignty, which relates to the point of having competing forms of money encroach into your market. If everybody were to use a new currency, let's say a stablecoin from another country, in that market, move-in the interest rate will have less of an impact, obviously. They're supporting digitization efforts in some countries, basically leapfrogging some of those interim technologies and forms of money. There's the reduction of informal economy. So that could increase tax revenue. It could also help merchants and businesses borrow, because all of those cash payments they receive today is very obscure and difficult to prove. So with a digital form of cash becoming the mode of payment, that starts presenting proof of the revenues they collect, which could, in theory, enable them to borrow. There's also the support of the delivery of benefits and aid. In 2020, we saw central banks around the world and governments around the world saying, how do we actually provide the COVID relief that we want to provide to citizens around the world in our jurisdictions? And it didn't matter which economy you're in, it was a problem in the majority of the world. There's also providing greater insights in monetary flows. So we have central bankers that love to dig into the data and understand how is money moving. Now with physical cash, that's much harder to do. So seeing that flow of money, seeing how is it interacting between different parts of the country or different types of merchants could definitely help in understanding what the central bank or governments can do from a monetary or fiscal policy perspective. Of course, that poses a bunch of other questions, which we'll get into. It could also facilitate global trade, right? By simplifying the cross-border payments. This is a hotly debated topic in certain central banks because that provides a shift in power. So we've spoken about a lot of the positive aspects and why we should do this, but it's really not simple to do this. There are many considerations And some of these could even be traps if they're not well considered. I've listed a few here on the screen, important topics that need to be considered while deciding whether to launch and how to launch a central bank digital currency. Let's run through the list real quick. Security. We have electronic modes of payment today, and they do experience security breaches. We need to ensure that central bank digital currency systems need to be as secure and possibly even more secure than what we know of compared to the systems that we have in place today. And the reason for more security could actually be due to the efficiency that we'll be providing through this new payment rails in new jurisdictions. If the flow of funds is that much quicker, it's that much quicker to siphon off some of the funds. So we need to ensure that the funds are safe and that if necessary, during an investigation, we can actually trace the flow of funds appropriately with privacy in mind, which we'll talk about. There's the security by design. When central bank digital currencies are being offered by technology providers, we highly encourage that central bank asks the tough questions. Ask us the tough questions, ask whatever provider the difficult questions to see how was security thought through from the beginning. It's not something that needs to be layered in afterwards. That should actually be an added benefit. But the security needs to be baked in at the beginning, considering where is the data residing. We want to make sure that there is no honeypot of like sensitive data or information about end users in one central location so that it could just be taken by a hacker. There's regular testing and security monitoring, obviously, data residency questions, which is a very important topic, especially when we start thinking about the interfacing with KYC AML systems, which rely upon databases that could be found in other jurisdictions. One topic that the GBBC community members probably hear a lot about is public chain or private permission chains, or how open should we make the system? Currently, we're seeing central banks really opting for private permission blockchains, but there are some central banks exploring public chains that are eco-friendly and have that flexibility of putting in the controls that are required. Moving on to policy and regulation. Central banks' ability to issue a CBDC is dependent on their right to do so. So there is some legislative work that may need to be done in certain jurisdictions so that the central bank can legally issue a central bank digital currency. We'll need to figure out also who can actually purchase CBDC directly from the central bank. There are considerations of widening that ecosystem. Possibly large non-bank financial institutions could go and interact directly with a central bank and say, send me some CBDC so that I can act and perform this particular market function that the market needs to the benefit of the people. And having that direct access to the central bank could make the process more efficient or more cost-effective. Policies need to be considered across a wide spectrum of areas. For example, what is sufficient KYC? What's the sufficient onboarding? And we can't make it too difficult because we're in many jurisdictions, we're trying to solve for financial inclusion. And the ability to provide that documentation could be severely limited by some segments of the population. Now, given the different levels of KYC that could be performed, what are the right level of tiers or limits that we could put in on their ability to spend or receive CBDC? Who's going to be responsible for AML, CFT functions? Are we going to ask the intermediaries to come up with their own solutions, or will they have to adhere to certain standards or a solution that will be provided with the base platform? These are all questions that are being asked, and we're going to see over the next few years how that's all going to pan out, how the different jurisdictions are going to address it. We don't think there's going to be a single solution because every jurisdiction is quite different, but that is it is an ongoing conversation. There's no clear answer that is applicable across the board. There's new stakeholders that will be gaining access or losing access to the central bank digital currency system over time. So these policies need to be clear. What sets an intermediary to be offside? What are the penalties for doing so? Will an intermediary that acts as a distributor of that CBDC to the general public, will they be able to host a node if it's a DLT-based solution so that they can have a decentralized infrastructure with obviously that centralized governance, mainly driven by the central bank? There's consumer protection, data access. interest rate policies. Central banks are very interested in that topic. So far, they've converged towards 0% interest, and non-interest bearing CBDC is the way to go. But that is still being debated, and I think some central banks will have a different approach in the years to come. There's the approach to limiting the disintermediation of banks. There are many measures and controls that have been instituted by the central bank digital currencies that are live right now, but those policies need to be well written out and possibly adapted over time. And obviously fees. So central bank digital currencies aim to reduce the costs of payments in most jurisdictions. It doesn't mean that it needs to be free. Now, if it's not free, what is the extent of fees? What are the extent of fees that are reasonable, and who would be benefiting from them? I'm moving on to privacy. Now, this is one area that Bitt cares deeply about, and we are doing our best to be in all of the different forums where we can contribute to the standardization of, or not standards, but setting guidelines around privacies for central bank digital currencies that are deployed around the world. The questions that need to be answered are really, who can access the data and what level of authority is required by each stakeholder group? For example, an intermediary or a central bank. Can the central bank launch an investigation on their own, or would they need to do, as they do today, work collaboratively with the financial institution or the intermediary that is responsible for onboarding a consumer to participate in that investigation, or block a wallet if there's illicit use that is suspected? Audit trails of data access is important. So just because someone does have access, we need to make sure that there's the right level of audit trails so that everything is logged. And then the ability to report off of CBDC transaction is useful to get those insights. Now, pulling reports sounds great, but then we got to think about, what does that mean in terms of privacy? How do we ensure that that information is useful yet anonymized so it can be used for any other use, and that nobody needs to worry about a payment that they've given to someone else and have that be known by other parties for no reasonable reason? Moving on to sustainability. So again, GBBC, the community is quite well versed in blockchains and sustainability and eco-friendly blockchains. This is a topic that still comes up in every single conversation we have with central banks, still asking those questions. Now, we've seen most central banks converge towards private permissioned blockchains. So generally, it's a non-issue. But there are central banks that are looking at public chains at this time, especially those that would have the baked-in controls to ensure that proper authorizations are placed so that who can hold it is well managed and controlled, and blacklisting is also possible. So public chains is also something that's being considered, just a little less, and there are eco-friendly options out there. Definitely a consideration that needs to be assessed prior to launching. The approach and project management, big topic, and we'll actually dig deeper into that as a dedicated discipline needs to be well managed during a deployment. So for the approach and project management, a central bank needs to decide how much are they going to do themselves. We've spoken to certain central banks, and same central banks actually in my time at Deloitte and Tech Consulting, as well as at Bitt. And these central banks are just information gathering. They're really internalizing the information themselves and going and working with academics, universities on proof of concepts. They really want to own the process. Now, I've seen other central banks that really want to give it out to the private sector. Maybe they don't have the capabilities or the budgets in the house to do it. They're asking for possibly free proof of concepts initially, right? And in some cases, they just want to completely outsource it. They have the budget to do so, and they want to move faster than what they can do internally without having to build up the capacity. So the approach to deploying it must consider how and what stakeholders are we going to be bringing in to make it a reality. There's also different stages, such as research, proof of concept, pilot, mass deployment. In that first central bank group that I've spoken about, where they're doing a lot of research, they're really taking their time. And other central banks around the world are really getting some of those conclusions from what they're making public. So not every central bank will need to do as extensive of research, Some are skipping and moving over to proof of concept right away, leveraging the research that's been done elsewhere. So where are they going to go and start the project, and how much time they're going to spend on the research versus proof of concept versus pilot and then going live is very different from one place to another. And that's something that needs to be considered upfront when doing a CBDC launch. There's what are the success criteria for each stage? Because we don't want to just clear one phase just to get to the next one without clearly achieving the objectives of that particular phase, so that we can move responsibly in accordance to the plan that's been set out. What are the timelines? We've had central banks that ask for really short timelines, as evidenced earlier in my intro at the Central Bank of Nigeria. Timelines were quite short because they knew exactly what they wanted and have done research prior to that. Now, there's some other timelines that are much more stretched, and there's no real right answer. It just needs to be well managed, considering all the risks and the communication and stakeholder engagements. And then finally, adoption. So what are the expectations of the general population? Some central banks are issuing surveys to try to collect that information from the general public. In other cases, they're asking for consultations with the private sector that have an opinion, that have expertise in central bank digital currencies, as well as financial stability questions in a given market. There are central banks that put out publications with an intent, right, of launching a CBDC, said, if we had this kind of design, what do you think would happen? And requesting comments in response to that publication. We need to ensure that the tech isn't just built with no awareness, which will result in no traction. So the marketing and the education that comes after it will be very important. There's a question about incentives. Some central banks provide incentives to bring the community to the platform, to initially test it, or to be early adopters, and then bank on the network effects to take it from there. Now, some central banks are opting for no incentives at all and just trying to take a slower route towards the adoption. And then the deployments actually need to be coordinated with other policies and initiatives. For example, if we're talking about the reaching the objective of digitizing a national currency for the purpose of digitizing an economy, well, just having that new payment rail isn't sufficient. We need to make sure that fintechs are encouraged to adopt that there is education and there is a thriving e-commerce ecosystem in that jurisdiction where people may not be used to those tools. We need to have those other policies and education to converge all the different aspects towards achieving that common goal of digitizing an economy. So that coordination is required. It's not just a siloed approach. As you can see, there's many different aspects, and a lot of these goes outside of technology. Now, what are these disciplines and different areas that need to be considered? Well, I have a slide on that. So clearly, it goes beyond technology. We are a tech company, so that's why that one's colored dark blue with our logo. But through our many deployments, we've seen firsthand what are the areas that benefit from extra attention, especially the attention that brings in a smooth go live and one that results in greater adoption. Our leaders at Bitt do have some experience in each one of these buckets, but we're not well suited to advise on that. So what we do is we bring in collaborators and we will partner with them to bring that more of a turnkey type solution over to a central bank. But we also encourage central banks to bring in their own advisors, and we can facilitate some introductions. Now, we're going to go through each of these one by one in no particular order, and we'll start with technology. So architecture is there up first because there are major implications that architecture will bring on what can the CBDC really achieve. It needs to consider, security, the privacy, which we've mentioned before. Who will host the infrastructure? Will it allow for offline payments? And if so, how? And under which constraints, what conditions? And when selecting a provider, it's important for a central bank to ask the questions to ensure that the solution actually addresses the central bank's design choices to respond to all those questions that we've listed out of those consideration page that we had earlier on. And we need to make sure that the architecture allows for the central bank's plans for the future, not just what's being launched right now. An out-of-the-box solution or a sandbox is great for simple education, but there's going to be customization. There's going to be configuration that's going to be really important. So the technology function needs to be paired well with central bank resources that understand technology, as well as the tech provider to build the right types of requirements and have that right kind of oversight. When picking a technology vendor, ensure that the integrator is well equipped to provide those requirements that are well signed off and well thought through and validated by the central bank. A service provider is going to need to do these customizations. And when these customizations are made on the system, we need to make sure that that system continues to be upgradable. So that's something that needs to be a forward-looking thinking, forward-looking approach that is applicable to all technologies. But it's a key question. That's why we have it here. In the case of integrations, we'll need to have collaborations very often between the other system and the central bank digital currency system. That other system could be a commercial bank's core banking system. It could be the central banks, the commercial bank, both of them, their core banking system, the RTGS, and other systems out there. Now, how the integration is approached could differ. In one of our implementations, it was a commercial bank that integrated with our CBDC system that we had put in place. What we did was provide documentation, training, and then office hours so that they can enable that integration. And we've replicated that across all the major banks in that jurisdiction. So now today, users can go onto their online banking portal and they can go and move their deposits over from their deposit account over to their CBDC wallet and vice versa. And that was done through an integration. Now that approach was about allowing the ecosystem to integrate with our technology. But in another case, it could be the other way around. Features need to be really well mapped out. So that technology roadmap is important because it could actually influence the tech provider's roadmap so that the functionality could just be provided as a base solution within the platform as opposed to something custom. And I'll move on and skip a few because in the interest of time, but on the issue of backup and disaster recovery, that's something that requires particular attention because we were talking about critical systems. The approach needs to be well planned out so that should there be a need to fall back to a secondary system, the approach to do so should already be well planned out and actually tested. Moving on to strategy. So it's important to start with what do we want to achieve? We can't just copy paste some other jurisdictions approach and design into it to a new jurisdiction because the set of challenges and cultural differences can be quite different. The funding mechanisms will influence what kind of fees are we going to put in place, and what is the level of contribution that we can go and seek out from the private sector to build upon the solution. Are incentives even possible? The operating model, who will host nodes, who will onboard users, who will monitor what transactions take place on the system. Understanding the impact of a CBDC on a financial system of an economy needs to be really well understood because putting it in place would go against the central bank's primary mandate of ensuring financial stability. So advisory firms are very well positioned to help with all of these different aspects of what can CBDC provide to that jurisdiction and what would it mean given design approach A versus design approach B on financial stability and the thriving of the payment sector in that ecosystem. So we can bring advisory firms to the table, or the central banks can use the firms that they already know quite well. Ideally, the right advisory firms to support that would be one that has central bank digital currency experience or a depth of expertise in the local payment system, and also have global expertise so they've seen it elsewhere. So if you'd like to have a conversation on that, you can reach out to me. Moving on to project program management. So one thing that we've seen as a critical success factor in one of our implementation was the senior leadership oversight from the central bank that was involved with the project. This senior leader at the central bank said that they've seen many large-scale programs take place in that jurisdiction and launched by the central bank, but none of them required as many directors to actually make the project go live. And the reason for it is the directors were brought in by that senior leader, showing the importance of attention on this initiative, bringing in the areas of relationship with banks, KYC, AML, security and risk, technology, HR, legal. We've had conversation with every one of those departments as part of the launch. So that senior leadership that can align all those different directors and directorates of the central bank is actually a really great advantage when launching a project. And often that senior leader will also be able to bring in supporters from other stakeholder groups. We're talking about politicians, Ministry of Digital Transformation, Ministry of Finance, bringing in financial institutions to ensure that they're on board and going to be supporting this initiative, or that the concerns are well understood, or bringing in fintechs to help and build upon this new platform of innovation. That senior leader really helps. And that would be part of the program management structure that is required at the central bank. Now, tying all those different aspects that we've explored already and we're going to continue going through in the subsequent slides is no easy feat. And central banks are not necessarily well equipped to do all of that because it's quite different than what they're used to in their day-to-day. So large consulting firms are well suited for the management of those different pillars and ensuring that there's alignment across them. For example, if there's a change in the user flow for the onboarding process, many different teams and possibly many different service providers, we need to get that information and make those appropriate changes, whether that influences education efforts, communications, websites, or the technology that enables that new workflow. All of these need to be well coordinated, and not doing so could lead to confusions or delay or poor user experience. So program management, very important because it is not just technology. Don't just rely on a technology provider to lead the whole initiative. Operationalization. So when you're setting up this new system, it comes in with new teams, new processes, new technologies. We need to ensure that there's a proper management of all the inbound questions, that information is always in sync between the policies, the websites, documentation. We need to capture all the requests from the market. Market research could lead to certain inputs on what they would advise to be on the roadmap. There's managing changes and communicating those to the general public. For example, if there's going to be a change in how the system will function, or there's new features that are going to be made available, the communication aspect is very important, and expectation setting as well. There's monitoring of the infrastructure and the software, testing, backup, CR, cyber resilience. There's the management of stakeholders. So when the implementation is ongoing, all the stakeholders are really top of mind. The intermediaries, what are we going to do with the payment service providers, fintechs, end users? But after, when we're in the operational mode, we need to continue having that ongoing conversation and understanding how is the system working for them? What are they really expecting? What are the challenges they're facing? How to continue to ensure that that adoption grows and they're still promoting that and understanding the value of the CBDC system. So operationally, there's lots of things to consider. So we need to set up the right team to do that. There's managing the onboarding and offboarding of participants, the governance of the platform. So who can make decisions on how that platform is going to evolve, considering all the new functionality needs to be added, or just aligning with changes in policies and regulations. I was actually happy to receive a call from an HR leader of a leading central bank asking what will be the implication on the teams of the central bank. What kind of new trainings will be required? Would there be new profiles? Do we need to set up a center of excellence? And when I received that question, I was thinking, this is a central bank that's actually thinking through each one of the areas that we're exploring today and making sure that they are really ready as they progress in their CBDC journey. All right, so marketing and communications. So marketing is something that's not really just at the end, at the launch. It's something that carries all the way from strategy all the way to operations. Expectation settings right up front is really important. And expectations from the right stakeholders is also key. We can't over-vector on what end users want, because that intermediary, which is the model that central banks are really adopting, that intermediary needs to be on board and understand how to interact with end users. So marketing is really key to understand how to communicate the value that the CBDC system will provide to each of the stakeholders in the CBDC ecosystem. The system is also going to be evolved. It's going to evolve. There's going to be new functionalities. The Central Bank of Nigeria launch was actually in October, and that was with just a first set of community. The first set of users are the ones that have smartphones, for example. Now, the Central Bank of Nigeria wants to use a central bank digital currency to help with financial inclusion. Of course, we're going to need to expand that beyond smartphone users and have USSD, which we're working on right now. So basically, feature phones are going to be interacting with the central bank digital currency system using USSD. And further on, there's going to be offline cards. Now, marketing and communications need to set the market expectations on what to expect and when, as well as how would it be used and why does it make sense to use a central bank digital currency system versus another solution that may be available, especially in a jurisdiction that is highly digitized and where payments are quite advanced. Now, in cases where the jurisdiction doesn't have a high level of digitization and electronic payments, it's important for marketing communications to really convey that confidence that the system will be secure and safe and really respond to their needs, and that it is the primary system that is safest in accordance with the central bank. So moving on to regulatory. Lots of different things need to be considered. Like I said, central banks need to make sure that they can actually launch. They also need to ensure that they know who they can interact with in the public. So if large fintechs and remittance providers want to get on board and work directly with the central bank, do the laws actually provide that? So these are questions to be asked and get ready for in advance, because that could greatly influence timelines. There will be the need for audits, and controls and audits are obviously going to change. Now, the final one is change management. The system will be changing. There will be new functionality. Laws and policies will change. And that means we need to manage all those instances of changing. If we think about the initial launch, the central bank needs to get used to this new system and the new roles that they're going to be playing. When we're talking about new functionality that's provided, well, what does it mean to all those stakeholders? We need to make sure we manage those changes well. We also need to make sure that the technological change comes out in a reliable manner that is non-disruptive. And that really covers all the different aspects that are, need to be considered in a CBDC launch that go beyond technology. So I hope that I really convinced you that when you're leading this, it should not just be seen as a technology perspective, but go well beyond that. So just to conclude, just want to reiterate, Bitt's mission is really to make digital currency available to all people. We provide the solution behind several central bank digital currency and stablecoin projects. And we provide the applications for all the major stakeholders of CBDC or stablecoin launch, whether that's the monetary authority, the intermediaries that distribute it to the end users, and the end users such as businesses and consumers. Thank you.
Imran, thank you so much. This is awesome. We really appreciate you sharing your insights like this as an experienced tech entrepreneur, precisely in this space. So we appreciate your time and your insight. And I'm sure the audience has learned very much from this presentation. I'm Diana again. I'm the head of research and sustainability for GBBC, and I'm going to take some of the questions from the audience. So getting started, the first question, I'm going to the first few questions talk about the same issue. So I'm going to group them into one. So Imran, what types of concerns and pushback do you think governments or central banks typically have about CBDCs? And in light of that, maybe your thoughts on the SEC rules on coins.
Okay, so I'll comment more on the first part of the question. Actual coins goes beyond just the CBDC and the stablecoin work we're doing with commercial banks that are licensed. Now, the top concerns that we're hearing, and this is through conversations with government officials in the US and other jurisdictions, central banks, IMF, World Bank, the top one that comes up is really privacy and control. We want to make sure that we're deploying new technologies in a responsible manner. Just the ability of providing that technology and providing more controls isn't really sufficient for us. We want to do that in a responsible manner. Ensuring that we abide by the laws of the country that are currently in place and the cultural norms of that country. We want to ensure that we're empowering users and not providing tools that could enable excessive supervision on transactions. So privacy is definitely one. Another one is security. So we understand the importance of ensuring that the money of a country, especially a central bank digital currency, central bank money, is seen as safe and secure. Central banks are generally known to be conservative organizations that take the right steps required to safely launch their initiatives. And we fully understand, respect that, and want to abide by that as much as possible. So privacy and security are the top two.
The next question touches upon the CBDC project going on in Ukraine. How is progress going with that? And also the collaboration between Bitt and Stellar. Are you using Stellar for any other CBDC projects?
Out of the public projects that we have today, Stellar is used in the Ukraine. So that's the only one that's made public so far. We are working with Stellar with the Tascom Bank, which is one of the oldest commercial banks in the Ukraine, on the e-hryvnia. It's basically a stable coin that is an extension of the initial work that was done over the past few years with the National Bank of Ukraine. Throughout this project, the National Bank of Ukraine is overseeing and trying to draw some learnings from the project, as well as the Ministry of Digital Transformation. So we're working very closely with them on that. We're quite excited about what the Stellar blockchain has to provide, where it is public, where while also having the right level of controls that are required for licensed institutions like Tascom Bank or central banks.
We only have time for one more question, and hopefully we'll make it quick. What are some of the challenges with launching CBDCs? Do these vary from country to country, and what are the similarities?
So one big difference is the internal capabilities of a central bank. So there are certain central banks that have really large institutions with very deep expertise in different areas, with large technology departments, and understand central bank digital currencies very deeply before we even start talking to them. There are others that are much more at the early stages where we speak to them about our solution, and then they say, you know what, we're actually going to change our approach. So the capabilities and depth of understanding of central banks differ greatly. And that is what I was referring to when I was saying how much external help are they going to need, right? In one case, I would really advise them to have, the marketing communications, advisory services from outside providers. And in some cases, they can rely a lot more internally. So that's one big difference. The similarities will be around their views around illicit use. They really want to make sure that this new system that is supposed to be more efficient isn't used more efficiently for illicit use, right? So that's something that's really top of mind, and all the controls that we're hearing are starting to converge around, limits on wallets, limits on not how much, there's how much you can hold, how much you can transact, and then how can you ensure that if there is a breach, there is a way to actually handle it and investigate it. So that's common throughout.
The right way. Well, thank you so much again, Imran and Bitt, for joining us today. This was a very thoughtful and engaging presentation and Q&A on CBDCs. We really look forward to hearing more about Bitt's progress as you've done so far, and you have more adventures ahead, I'm sure. A recording of this presentation will be circulated to all those who registered, and it will also be shared publicly on the GBBC's YouTube channel. So thank you all and have a great rest of your day.
Thank you.